And the reason I expected the Fed to deliver a 75 basis point rate hike is that the Fed has gotten into a habit of delivering exactly what the markets expect. For a while, there were some people who were thinking maybe it would be 100 basis points. But since that was a minority position, I didn't think the Fed was going to do that. If the majority of people thought the Fed was going to hike by 100 basis points, then the Fed would have delivered 100 basis points. It didn't do it because it doesn't want to upset the markets. Because even though Powell claims he doesn't care about the markets, he absolutely does care. And so he only wants to raise by the amount that he thinks the markets are okay with. Because after all, if the expectation of a 75 basis point rate hike is already priced in, then you don't risk doing any damage by delivering something that's already priced in. Probably what Powell may not understand is that it really doesn't matter at this point, even if Powell delivers exactly what's expected. What is expected is very bad for stocks. Would it have been worse if he raised rates by 100 basis points? Maybe. But given how weak the markets were, it's hard to believe it would have been much worse. And the problem for the markets is rates are going up. By how much, it doesn't even matter at this point. What matters more is that they're not zero anymore and they're going much higher. And you have a market that is priced basically for free money, for 0% interest rates. And not only 0% interest rates, but quantitative easing. And not only don't we have quantitative easing, we now have quantitative tightening, although there was very little, if any, mention of quantitative tightening today, either by Powell in his prepared remarks or in the Q&A that followed, and I'll be talking about that. But the markets know that there's no more QE program to rely on. And you can look at a chart and compare the stock market gains since 2008 with QE programs, and they're very highly correlated. So the markets have lost the two primary crutches that they were relying on for support, quantitative easing and cheap money. But not only are those supports gone, but now we have the opposite. We have quantitative tightening and we have money that's getting a lot more expensive. And in fact, Powell actually promised during the Q&A that he was going to move interest rates up to the point where we had positive real interest rates. He didn't just talk about nominal increases. Powell acknowledged that what was needed was positive real interest rates. And Powell believes that by next year, we will have positive real interest rates. In fact, two things that he did say that may have surprised the markets a little bit in the fact that they might have been a bit more hawkish than what the markets expected was that Powell suggested that by the end of the year, interest rates would be at 4.4. That would be, I guess, the midpoint for the Fed funds rate, 4.4. How we got 4.4 exactly, I don't really know. But that would imply that we were at 4.25 to 4.5, which would mean another 125 more basis points of tightening between now and the end of the year. And I think that's a bit more than the markets expected. But also in the Q&A, when Powell was talking about delivering positive real interest rates, he thought that the Fed funds rate would be about 4.6% at that point. So maybe one extra 25 basis point hike. But according to Powell, at that point, that 4.6% Fed funds rate would deliver a yield in excess of what he believes the inflation rate will have fallen to by that point. Now, he talked about inflation expectations. So maybe he didn't mean the trailing inflation rate, but what the markets expected the 12-month forward inflation rate to be. He is promising positive real interest rates, the opposite of what we've had all along. We have had negative real interest rates. Even at this point in time, we still have negative real interest rates, despite the fact that the Fed has moved interest rates up to 3 to 3.25. Inflation is 8.5. So you've got negative 5% real rates, and Powell is saying or acknowledging that what's needed is positive real rates, and he expects to achieve that by next year. Now, first of all, if Powell is finally admitting that we need positive real interest rates, and he seemed to claim that that's what's needed to really exert downward pressure on inflation. And in fact, he said that even with the recent 75 basis point hike, that all we've done is move into the lower level of being restrictive. So Powell thinks this is restrictive. It's just at the lower end of that range, but it's not restrictive. If inflation is above 8 and interest rates are barely above 3, you're still at negative 5% real. You're not restrictive at all. But if Powell finally is accepting the fact that to really push down inflation, we need to have positive real interest rates, why not immediately move there right now? Why drag your feet? Why wait? In fact, why does the Fed even have to wait for a meeting to raise interest rates? If the Fed recognizes that interest rates are too low, why can't it just raise them the minute it recognizes that? Why does it have to wait for an actual meeting? And why does it have to use this incremental approach? In fact, one of the questions that Powell was asked about why it's so important to fight inflation now is he said, well, we can't do it later because it will be so much more painful. So we have to act quickly to try to ease the pain. Yes, it's going to be painful. Powell admitted that there's no way that we're going to address this inflation problem without any pain. He just says that we can't risk fighting the inflation later because then we're going to have even more pain. Yes, that's true. So where was Powell a few years ago when he said we're going to err on the side of allowing the inflation genie to get out of the bottle? If Powell knows how painful it is to deal with an inflation problem, why did he let it get out of control in the first place? Why didn't he preemptively act when he had the opportunity? Obviously, all he was doing back then was delaying. He didn't care about the delay or how much more pain we would ultimately have to endure, because at that point, inflation wasn't a big problem. The reason he wants to do something about it now is that the problem is so big, it can no longer be ignored. Despite the fact that Powell acknowledged that there's no getting rid of this inflation problem without some pain, he's still holding out hope that the Fed can orchestrate a soft landing. That ship has sailed. In fact, the Atlanta Fed just came out again with another downward revision to Q3 GDP. It's now at just 0.3. And this is in line with exactly what I've been saying would happen with respect to the Atlanta Fed. They're going to keep downwardly revising this estimate until we end up with a negative number. So if we have 3 negative GDP quarters, how could you talk about avoiding a soft landing? And in fact, Powell talked a lot about the supposed strength of the economy because he was asked about it, and Powell described the economy as being strong and robust. He didn't just say it was strong, and he didn't just say it was robust. He said it was strong and robust. That's how strong Powell believes the U.S. economy is, despite the fact that you have 2 and probably 3 consecutive quarters of falling GDP growth.